What's up, everybody? Michael Silva here. There's 1,001 reasons to be bearish the stock market, but yet I'm finding positions to go long in. U.S. Michigan Consumer Sentiment Index came out at a decade low. CPI year over year, we discussed this. It's printing its highest print since the early 90s. Total market cap to GDP is pressing 210%. Nothing to worry about, folks. That's also known as the Buffett indicator. Real yields have crushed down to the lowest point since the 70s, which is typically good for gold. All while the Fed's fund rate, that red line right down there, is pressed down to zero still in this high inflationary environment. Typically what you get is Fed to raise rates during this time to fight inflation. And then you got United States job quits. What does this mean? Well, it's tracking since early 2000 voluntary job quits. And it rose to 4.4 million in September. A record. So people are just saying, heck with working, I could just invest in Doge. U.S. yields brought in the 20. Yes, the green is the 20. The black line is the 30. The 20 is above the 30, which equals an inverted yield curve. We've been watching the 4 yield inversion curves now, and we talked about it a few videos ago, but we're looking at the US 35 and also the 10 and 2 that's typically tracked. The 30 and 5 is continuing to flatten itself downwards, head south, but it's still far away from inversion. What would that look like on this specific chart? Well, it's when this purple line gets above the 30, and you can see there's still a fairly big distance, but anytime you see a yield curve inversion, it's a little bit of a red flag. Yeah. The 10-year yield itself looks like a massive inverse head and shoulders, which who knows what's going to happen to the markets if this thing starts breaking out and moving fast to the upside. The 5-year is already broken from its bottoming pattern, and it was up 17.27% on the week. Things are getting crazy in the markets. That's for sure. The Baltic Dry Index, which we talked about on a previous episode, has been falling off a cliff. Meanwhile, the S&P 500 continues to trek upwards. Typically, when you get big sell-offs like this, the market can't continue to press up, but it has. It has, in the past, once it's fallen, has been a leading indicator that the market does see some turbulence in the near-term future. But nothing to worry about, ladies and gentlemen. Nothing to worry about, right? We have seasonality on our side. October, November, December, right? November, December, the end of the year rally, the Santa Claus rally. Typically on an average year, look at this, from November to the end of December, it's pretty much vertically straight. And when we've been seeing a vertically straight move, typically get a mid-November pullback. Post-election year, you typically at the beginning of December, which we're in a post-election year, you get a little bit of a drawdown and then a big old rip up to the end of year. We're going to go into a lot of detail today. If you're new here, welcome to the show. This is the Stock Market Brief Show. We're doing a weekly recap. Timestamps are in the description below. Got a lot to talk about, including the crypto, the various indices, some commodities, etc. So let's just go ahead and get into today's show. Welcome back. If you haven't done so already, I'd really appreciate it if you hit that like button. It costs you nothing to do so, as well as the subscribe button. I would really like to hit 100,000 subscribers this year. It seems like a far off chance, but hey, you never know. You never know. This is the market dashboard section. Let's take a look at the weekly performance for the 11 sectors in the S&P 500. Materials led the way. What performed the worst? XLY, that's consumer discretionary. Let's take a look at the 11 sectors at a candle glance. This is the S&P 500 on the top left. You can see a pretty nice trading day there on Friday, which matches well with technology, which typically means, well, I mean, technology is what's been holding this market together. It's not the S&P 500, it's the S&P 7. But let's take a look at the other sectors. Consumer discretionary had the worst week performance, but it's forming a nice little hammer candle right here by the 20-day moving average. So perhaps we bounce from that area. That's always a possibility. Communications, it's below the 50-day, just got above the 20-day moving average. It's been in this consolidation. Not all that great for communications, kind of the laggard of the bunch. Technology, we just recently discussed. I mean, technology is pretty Just look at the big cap tech stocks. I mean, there's really not much to report there. We'll talk more on the Nasdaq 100 about technology. Industrials kind of flagging right here, and it's above the 20 and the 50-day moving average. Materials was the shining star of the week, and it continues to press up right here above the 20, above the 50. Might be getting a little overextended from the 20-day moving average, but still looking good overall. Energy has been in this consolidation. As you can see, I'd be very careful with energy. As of right now, it's below the 20-day, and it's kind of like putting in some lower highs right here. If you can kind of see these lower highs printing, it's like walking off a cliff. So if it starts getting below the lows of these candles, which is probably right around 57-ish, we might have a reconnect to the 50-day moving average very soon. We'll take a look at oil here soon too as well, because that's an important factor. Consumer staples is just trucking up decently, right? Above the 20, above the 50. We had a little tiny crossover here recently, which is, always bullish for consumer staples. But typically when consumer staples is doing well, it's more of a defensive type sector. Healthcare also kind of defensive, but it did break out of this little tiny consolidation, formed a little hammer candle here. We'll see if it wants to continue its run up. I do see some good healthcare stocks out there. CNC is a ticker symbol that I posted on Twitter. If you don't follow me there, you can follow me there. But it's typically pretty good. Utilities has been also consolidating within a tight little channel. It is below the 20-day, right above the 50-day. I'm sorry, below the 20-day and above the 50-day moving average. Typically, what you want to see is utilities underperform, because utilities is a defensive sector. And if utilities is underperforming, well, that's typically good for the overall market, which, if you're long stocks, you typically want to see utilities underperform. Unless you're long utilities, then you want to see utilities perform. Financials have been consolidating, put in a nice hammer candle there on Friday. It's getting very, very tight price action right there. So watch financials to potentially break out of this zone here. If rates go up, which we just recently talked about, yields, if they go up, that typically helps financials to an extent. So we'll continue to watch that, but we want to reclaim that 20-day moving average right above that 41, I'd say. And then I think there's some room for financials to go. A lot of financial stocks are looking rather good. And if you're part of the Discord community or part of my Patreon that supports my channel, it's $9 a month. I give you trade ideas. I'm about to load up some trade ideas, and I'll tell you what, a couple of them are in financials, and there's a lot of good setups out there right now. So it's hard to be bearish despite all the evidence to be bearish at this particular point in time. And then we got real estate over here, still above the 20-day, and the 50-day is rather flat to neutral. 20 days inclining, that's good. Kind of flagging right here. Pennant, it's just getting a really tight price action as well, which is never bearish. It's bullish, right? So if we start breaking out of this and we start going higher, real estate's been a good performing sector overall. So let's continue on. Now, materials, we talked about that being the number one sector. So what was the top performing there in materials? It was non-ferrous metals, aluminum mining, gold mining. Gold mining and mining have been taken off because we've been seeing what? Well, real yields crash down to the floor. We're starting to see gold kind of, come back and what's a good word? Energize itself a little bit here as the inflation hedge potentially, but we don't know if it's a fake out or a breakout yet at this particular point in time. It's still early to tell. As far as the worst performing sector, it was consumer discretionary, and really led by automobiles down there towards the bottom of the screen, which we know why. Well, Tesla was down 15% or so on the week because it rallied incredibly through the roof, and now it's pulling itself back. It was a gamma squeeze or a short squeeze, whatever you want to call it. And one interesting sector that I found, I feel like there might be some potential there. Home construction, durable home products, those finished up on the week in the consumer discretionary sector. So if consumer discretionary starts to lift back up, those might be strong performers. Now, like I said, Tesla, it went on this huge ramp up and then just completely collided. So that's going to hold down consumer discretionary. That's a big weight of consumer discretionary, right? But if you take a look at the housing index, and this is why I'm pointing out the housing index as being a potential opportunity. It's forming somewhat of a inverse head and shoulder right here. So look for a break above 500, and it could take the housing index higher. And what I found interesting was when you really look into the individual stocks that make up, housing, you can look at, some large cap names like DHI, Lennar, Toll Brothers, and you could take a look at those charts. So if you just screenshot this, maybe you can pull up some of those charts and you might find some good trade ideas within that. If we go ahead and go to the next one, I'll show you one specifically that's pretty interesting. Lennar has been in this range consolidation for the majority of this year, really since March, but it's just been pinging back in this range. This is the weekly time frame. But what I want to call out here, you have the PMO potentially crossing over here as a bullish crossover. The RSI is tracking up. It's above 50. You're pressing above the 5-week moving average, and the 30-week, it's above an inclining 30-week moving average. So this is in bullish context. I think if it breaks 110, Lennar can head higher. So that's something to potentially watch there, ladies and gentlemen. Let's hop into the S&P 500. S&P 500 hanging man candle. Where is it at? It's above the upper Bollinger Band. That's always really bullish. Psych. That's, it's not necessarily a good thing. It's typically overextended. The 5-day, it held it, or 5-week moving average still held as support, pulled back to around that area, and then started moving up higher. What do we really have? We have an inside trading week. So if we break above the high, which was, where was it? 4714. We'll call it 4715. If we break above that, we can scream higher. But if we start breaking below the low and the 5-day moving average, perhaps we do get that reconnect of this previous swing high right here, which is right at around 45.50. Okay, let's move on. Okay, I got so many charts to talk about today. Oh my goodness, it's gonna take forever, but it's good, especially if you want to learn, right? And especially if you want to actually be successful in these markets, you got to put in the time. You got to do it. S&P 500 on the daily time frame. It's been on a monster tear up, right? We talked about this inverse head and shoulders breaking through this trend line. Kapow. Then we saw some weakness right in here. And then what happened? Well, Friday, we saw a big move to the upside, really driven by a few tech stocks. 20-day moving average continues to press up higher. I still think that we potentially, if we start breaking down from this previous low right here, 20-day might hold as an area of support too as well. We don't know whether or not if the market's going to continue to ramp up higher or consolidate. And right now, this is consolidation. This is nothing to fear, right? This is a big move up. We're seeing a pullback. That's completely natural. What is this, a 2% move? Look at, maybe it consolidates, whatever. That would actually be a good thing, and then it breaks out. But what I don't want to see, which would be bearish, is a move to all-time highs just right out of the gate. It's going to put it so on a negative divergence. Meanwhile, this looks like it's about to have a bearish crossover. So be aware of the negative divergence that could potentially form from this, and that could put in a short-term top to potentially connect or head a little bit lower. We are getting pretty disconnected from the 50-day moving average. And typically, when you get these big overextensions from a 20-day or 50-day moving average, you get reconnects. It reverts to that mean, so to say. 15-minute time frame. Potentially descending broadening wedge pattern. One thing that I want to call out here, it's kind of just, look at it, broke out of this little consolidation. It's consolidating right here. There could be a little flag and then brings us up. Another thing that you can potentially call out is this could very well be a neckline to an inverse head and shoulders, which would take us to around 475 on the SPY, which would be what? That would be a all-time high on the SPY. Doing so, probably bringing the S&P 500 on a negative divergence. So be aware of that. Price action is bullish. I tell you, there's a million reasons and million narratives to be bearish, but the price action is looking pretty good so far, right? If we take a look at the 30-minute time frame on the VIX, we were talking about a potential double bottom. Well, we got the VIX crush Friday. Not surprised there, creating a pretty tight falling wedge, as you can see. The VIX here is putting in lower lows, which is never bearish, right? That's not bearish for the stock market, but it's not doing so really on, it's kind of a very small positive divergence. If I were to bring this to the 15-minute time frame, you would see more clearly a positive divergence building here, which could potentially pop the VIX up and fill this gap that it just left. So short-term volatility, especially going into next week, I would expect to see some more volatility take place, especially with what's going on with the bond market. BP-SPX chart still holds a negative divergence here, which is never a good thing. It's not far from overbought territory. So can the market continue to press lower a little bit? Yeah, absolutely. So we'll continue to watch it. NIMO got that negative red reading. Now we had a couple of up days, still putting in a negative divergence there. Let's look at the Dow Jones. Dow Jones on the weekly time frame, bearish candle. This is known as dark cloud coverage, I believe it is, where you gap up and then you close more than midway through the previous weekly candle. So it's technically a topping type candle formation, but how many times have we seen topping candle formations and it doesn't follow through, right? What you need to see now is it to get confirmation. So we need to close below just under 36,000. Then we can potentially head lower, maybe reconnect with a 30-week or the 20-week moving average, and that's around 35,000. So, still above the weekly 5. Everything's fine so far there. If we take a look at the Dow Jones Industrial Average on the daily time frame, we broke out, we came back to the 20-day moving average, and we're finding a little bit of support there. Not much to report. Looking at the 2-hour time frame on the DIA, I didn't bring up the 2-hour time frame on the S&P 500. I should have, but I'm going to start bringing in the 2-hour time frame on occasion because it allows us to see just a different time frame and maybe something that we could potentially miss. And what I see here is the MACD's crossing over to potentially bullish, and it's right there at that 0 line. We saw a little strong pull right here. Now it's been consolidating with some indecision. It's not too far above the 20 EMA and it's above the 50 EMA, and they're both sloping up. So this is not really that bearish for Dow Jones Industrial. So if we start breaking above this, we can start heading higher, and we can put in new highs on those negative divergences like I just said. So let's continue to watch what plays out there. If we take a look at the 15-minute time frame, you can see here there's also the possibility, like I said, breaking out of this channel to the upside, but also a potential inverse head and shoulders, which can shoot us probably to the previous all-time high right there too as well. Okay, so some bullish price action overall, but short term, keep in mind 5-day moving average is sloping down, and we are below it on the Dow Jones Industrial. So you want to see that recoup. Meanwhile, transports, which makes up a big portion. If you follow Dow theory, you got to watch transports, and this is insane. First off, that I don't think has ever happened in history. A move outside from 16,000 to 8, that is it's craziness. Absolutely bonkers. But what I want to call out here, it's potentially flagging again, right? It could be consolidating within this flag for another move. I don't know if it's going to be that aggressive a move. That's not normal, but it's consolidating right now. It is what it is. Let's call it. It's in bullish context as it's holding above all highs, and it's at that was its all-time high right there. Meanwhile, industrials are also right around their all-time high, so there's nothing to really note there from a negative perspective. Nasdaq 100. Let's look at the weekly time frame, ladies and gentlemen. Inside trading candle, what does that mean? Well, if we start breaking above, we head higher. If we start breaking below the 5-week EMA, we head lower potentially to the 20 or this previous high right over here, which is at 15,750. We have a bullish crossover looking like it's taking place, and the PMO. Also, RSI, it's just slightly overbought there. So it's not indecision. We closed, look where we closed. First off, the 5 EMA on the weekly time frame held perfectly as support, and then we closed right there at the upper Bollinger Band. Typically, this is overextension where you want to see it pull back, but it's just not happening. It's not happening yet. If you take a look at the daily time frame, we're still ping-ponging around within this channel. We hit the upper edge, we fell down, and then we saw a little bit of strength. I'm not surprised there because on the previous episodes that we talked about, tech got hit kind of hard, and you typically get some sort of a bounce to alleviate that, and that helped lift this up. So when you take a look at, for example, NVIDIA or Tesla, those are two monsters, not only from a market cap perspective, but from an implied volatility perspective too as well. So those you want to pay close attention to because they are overextended and they could really put some damage on the Nasdaq 100 and even the S&P 500, especially if you start to see those go down. You might see some other big names follow suit too as well. Google is a big one that you also want to keep a close eye on. Let's take a look at the cues on the 2-hour time frame. See this, once again, it doesn't look too bad from a price action perspective. You have the 20 EMA up, 50 EMA up, price action above it, bullish crossover looking like it's about to take place. So if we start breaking above this little area, we can go ahead to all-time high territory rather quickly. If you take a look at the 15-minute time frame, potentially flagging still under this little resistance here above the 5-day moving average. Hey, if we start breaking out, like I said, it looks like it could potentially head up higher, and we still have the possibility for that inverse head and shoulder right here with that neckline as well to bring us to those all-time highs. So there's probably going to be a lot of volatility coming into next week. There's a lot of bullish things going on. There's a lot of bearish narratives out there. Like I said, you just got to be careful in this environment. Russell 2000 Russell 2000 looks like it's about to have a weekly crossover, bullish crossover on the PMO. The MACD did crossover, so that's a bullish sign, especially on a breakout of a consolidation that's been lasting for about a year, if not a year. Price action's above the upper Bollinger Band. We saw a slight, move to the downside on the week, but overall we're above the 5 EMA and we're above the 30 EMA. We have a solid breakout. Perhaps we come back to back test that, and then we see if it holds its supports. Let's go to the daily time frame so you can see it a little bit more clear. Daily time frame, like I said, we broke out, got pretty overextended on that move. Nice volume on the breakout. Volume is doing what? It's declining. So the move out, increasing volume. The move in, decreasing volume. That's not a bad sign. What would be a bad sign is if this broke out on declining volume and came in on increasing volume. Then I'd be like, oh, careful here. I think that we still by the way, it's just an inside trading candle this previous day. So if we were to really zoom in, if we start getting above that 241 or whatever, we can head higher. Click that. If we start cracking below that, then I think we come to back test, which is right around the 20-day moving average and this previous area of resistance, which resistance, once broken, can become a level of support. Somebody out there in the FinTwit community also drew the dynamics of, hey, watch out, because if it comes in, boom, and it's just a big bull trap. I don't necessarily believe that, but what I believe honestly does not matter, because if it happens, well, you just need to be prepared. It's as simple as that, right? People try to predict, be right, be wrong. Who really cares? If you're making money, you're making money, and all you need to do to make money is control the 4 things that you have complete control over, and that is what to buy, how much you should buy, when to buy it, and when you should sell it. IWM on the 2-hour time frame doesn't look all too hot, to be quite honest, so that's why I might come in a little bit more. We're right around the 20-day moving average. You can see here a high, a lower high, a lower high, a low, a lower low. So perhaps we take out this lower low, and that could send us to that back test, which is like, where was the back test? I already forget the number. The back test was right around 232.50, or the 20-period moving average, which is at 232.90. So if I were to look at this, 232.9 right here in this zone. That's the 15-minute time frame. 232, which is right around here. So bam, 230 to 232, this zone right in here. So if we take out that low, this would be the area, the zone that you want to potentially look to hedge long. Keep in mind, though, these EMAs would be crossing over to potentially bearish, and that could be a trend change. On a good note, though, we do have this histogram on the MACD turning up, and we have a bullish crossover potentially in the making. It's not quite there yet. Well, I want to see it curl up a little bit more. Let's move on to the 15-minute time frame. 15-minute time frame. Not much price action, right? These last couple of days, right? Just boom, range bound. So 239, if we start breaking down, we take out that low. Just 236, we head down to that area, which I just recently discussed. Not much to talk about there. Let's get into commodities. Commodities, gold. So this is where it's weird. The dollar's rising, but gold's rising with it. And that correlation is totally fine. There are periods in time, which I've already shown a chart for on the previous episode, that you have it doesn't last long, but a positive correlation does happen. It's just not that frequent. And what we see here, some strength in the dollar as real yield, or strength in the gold as real yields have been completely hitting the floor. So a high of 1871. We can see here, we came up, we're consolidating sideways. As long as it holds 1840, we're good. But if this starts cracking down, just be cautious. Once again, gold takes a big hit to the downside, but this could be the start of a big move. This is a very solid breakout so far. It is getting a little ahead of itself. Maybe we get a back test to 1840. Maybe it comes down just a little bit to trick some people out and then head higher. That's always a possibility too. So far, it's looking very strong and very good. What's tripping me up is that dang dollar. Dollar we'll get into here shortly. Silver put in a hanging man type candle, a little gravestone. No, it's not a gravestone doji. I don't know what this is called, but it's a firestone doji. I can't remember, but basically an indecision candle. Showed a lot of weakness, but bull step right back. I think it makes sense. It came right into the 200-day moving average, found its resistance, fell down, but then the bulls press it back up. So if we get above that 25.50, that's looking pretty solid for silver. And you can see here it flagged. So a full measured move would take us up probably around $28, $29 on that, which would be very good for individual silver miners, and it would be very good for silver in itself, obviously. Copper still holding a tight consolidation area right over here. Ooh, hello. right here in this little pocket. As you can see, it broke out, came back, and it's holding as support. We have a PPO crossover potentially taking place going above zero, which can send copper right back to its previous all-time high where it had supply right in there and supply right in there. If it starts getting above that, holy moly, buckle up. That's a big move. Oil. All right, so this is an important one to watch because we were recently discussing the energy sector. Not a horrible look, right? So we broke out a huge run. Right, inflation is transitory apparently. 85 clearly a level of supply, and then right in this 78, 79 zone is an area of support. Why? Well, we had support right there. We're forming a couple of hammer candles not too far from. We had the 50-day also sloping up right there too as well. So overall, this is just in a range, which means you short at the upper area right up here, you buy long right down here, and you can take profits in the middle of the range until it breaks down. Boom, we can head lower, or until it breaks up out of 85, we head higher. So as it stands right now, this is a period of consolidation. What is interesting though is that this candle was a huge range bearish candle as it gapped up, engulfed the entire thing, and now we're starting to see some weakness follow through. So we really need to get above 85 to see the energy sector continue to perform. Let's hop into the dollar really quick. So the dollar, this is what's crazy to me. The dollar has this inverse correlation to the S&P 500. So the dollar breaks out in a rapid move, and we are approaching the area, I'd say 96, 96.50, where it can put some real damage in the equity market, especially at a move like this. Okay, and what I find so interesting is, one, gold is moving up, S&P 500 moving up, and once again, this can happen, so you can't be shocked that this is taking place. But look at what happened intraday. And this is what just shocks me. So intraday, on this specific day, on Friday, the dollar, this is a 2-minute chart. Wham! Slammed to the downside very, very quickly and abruptly. I don't have the news on what happened there, but I'm sure that it was something that came up. And we got this big slam to the downside. And look at what the S&P 500 did right then and there. Shaboom. Very shortly after, the S&P 500 just ripped. And to me, that just says, okay, this market is crazy. So you tell me when the dollar drops, that's great for the S&P 500 and great for equities, right? But if the dollar rises, the S&P 500 didn't even really budge, down maybe 2% or so. So the inverse correlation is there, but it's just a very weird one. If we take a look at the weekly time frame, inverse head and shoulder, we broke out. We talked about this before the breakout. Now we're getting above this area. This is the target, 96 to around 98 for a full measured move of this inverse head and shoulder. If you even take a look at the opposite side, the Euro USD head and shoulders pattern, we broke down. This broke out of this little tiny tight pattern, bam, to the downside. So the target is 1.11. Maybe just a little bit lower for a full measured move of this breakdown. Interesting. Okay, let's move on. Let's get into crypto. Okay, this is what you all been waiting for, apparently. No, I don't know. The sell signal was triggered in crypto. What does this mean? Let me walk you through it. This is not a time to be scared, frightful, short crypto, on leverage, do anything nuts. Okay, this is just a guide. That's all this is. This is just a guide that I use, and it's an indicator, right? But you need a strategy around the indicator. You don't just sell if it triggers, okay? So you need to just be cautious when a sell signal triggers. So, for example, I'll walk through this again. There's a video that highlights the exact strategy. And I don't want to get too much into it because the video is already running long. But when we crossed down through zero, well, we saw a sell-off. Okay, we don't know that it was going to be a 50% sell-off at all. We did not know that. When we had a buy signal, you might be like, well, there's a buy signal and a sell signal here. Nope, actually, part of the strategy, those were false signals. And if you watch the video, you'll know why those were false signals. This was the buy strategy, or this was the buy signal. I bought in, wham, nice run up in Bitcoin and Ethereum. Sell signal triggered, I was stopped out, waited for the next buy signal, wham. So the last couple of buy signals, very good. The last couple of sell signals, they've done good too, right? If I would have actually not even sold out of this position, I would have been totally fine. That's what people might think. But who's to say that this sell signal couldn't have been another one of these type of sell signals? The the point of this indicator is to help me catch the large moves and protect myself from the big moves to the downside. Okay, so yes, this triggered. Is it going to be turning into something? I don't know. What is my plan? Well, simply put, now what you do is, okay, it triggered and it could easily flip back next week, right? It could do that. And from a price action perspective, which we'll get into, it actually it doesn't look too bad, right? It doesn't, but that's not to say that it can't get bad. Especially with this little shooting star candle right here, right? This big, bulls, boom, and then the bears step right back in and reversed it. So what you do is you put a stop loss below the week or the previous week, whatever you choose. It's up to you. It's up to your discretion. That's 60, under 62.5 or under 60,000. That's a big discrepancy, right? That's a couple thousand points. So, that's up to you. So if this continues to head lower and this starts to break down and you're stopped out, hey, maybe you get a big flush. Or maybe it just goes like this, boom, bam. And then you'd be like, oh no, what? It's back onto a buy signal. Because, even if you get stopped out and this starts moving up again, the buy signal will come back and then you enter back in on the buy signal. That's what I do. It's to protect me. I don't know if it's going to be a big drop. I don't know if it's going to be a quick hit or anything. But this has been heading down for quite some time, since really right this point. It started turning down, and right around this point, I started notifying people. And look at where price really went. It did not go anywhere. So clearly, when you look at the rate of change between these two assets, and you're seeing this decline, you can see here that there has been just choppiness and weakness taking place in this in Bitcoin, or in various cryptos. All right, so it's a time to just be cautious, a time to be very careful. Can we see a big correction? Absolutely. Can we see a very small, hiccup? Absolutely. It could be a whipsaw. Whipsaws happen. Okay, so don't freak out, right? Just have a strategy. Like, that's all you need. If you have a strategy and if you have a game plan, you don't need to worry. You might miss a couple of $1,000 point move, right? If it just turns right back around. But if it doesn't and you stay in, well, you might take a 20% drawdown. The last sell signal was about a 20% drawdown from peak to trough, boom to boom. And this one was around a 50 plus, from peak to trough, boom to boom. Does the sell signal catch that entire move? Nope. Did the sell signal right here catch that entire 20% drop? Nope. But it saved me, right? It saved me from some losses. And by the way, where I stand right now is up 60% since the last two buy signals. That's where I'm at, 60%. Trading in and out of the position. That's pretty freaking cool in my opinion. Let's move on to Bitcoin on the daily chart. As you can see, why am I saying that it might not be that bearish? Well, it doesn't look all that bearish on the price action chart, right? We had a big breakout right around all-time highs. Yeah, we're getting some supply right around 68,000. And we have all this price consolidation right here, and price, ramped up, and now we're pulling back. And yeah, could this come back and test the 50-day or the lower Bollinger Band? Yeah, sure. Can it break down below 58,000 and head lower? Yeah, sure. But it hasn't. It looks like a little cup handle sort of type of thing coming on right now. And, it just doesn't look too bearish to me at this particular point in time. But I'm going to stick to the strategy. So what I think I got to reiterate this. What I think that Bitcoin will turn around and head higher just by looking at the price action. But what I think does not matter. It does not matter. What matters is the strategy. And on top of that, sticking to the strategy. Because if I'm wrong about this not turning up and going higher and it breaks down, guess what? It doesn't matter because I'm protected. That's how you do it. Bitcoin on the 2-hour chart doesn't look as good. We had a little bit of a bearish crossover right here with the 20 and the 50 EMAs. Okay, that's one thing. We had this big pull move to the downside. So we have a high, a lower high, and a lower high right here. So if we start getting a 2-hour candle close below 63,000, that can send us lower into probably that next area of support, which is right around 60,000 to 60,500. Okay, so that is what you should be watching out for. We'll see if this can recoup. What you want to see is price action to get back above 65,000 if you're bullish, and then even above 66,000. That would be a lot of repair right there in this weakness as it stands right now. If you take a look at Ethereum, Weekly time frame, put in a shooting star type candle, pretty disconnected from the weekly 5 EMA, so reconnect to it would make sense. We'll see what happens here in the weeks to come. Ethereum on the daily time frame, you can see here price action is getting very tight. So you can see one big candle, inside trading candle to this candle, and another inside trading candle to this one. So if we start breaking above this area, 4,800, we can rip. But if we start breaking below, right down at 4,500, we can also rip to the downside. It's range bound right now. We also have the PPO crossing over to bearish, so that doesn't help. But overall, once again, we're in an up channel. We have a high, a higher high, a higher high, a higher high, a higher high, a low, a higher low, a higher low, a higher low, and a higher low. So until that changes, it still remains bullish. That's just how to see it. 2-hour time frame, it's not looking all that great, okay? It's not, but it's not looking all too bearish either. We had the little bearish crossover right here between the 20 and 50 EMAs. We have a high, lower high, lower high, a low, a higher low, and a higher low. So what is this? It is expansion with big volume and in contraction. It's coiling up. All right, so if we break down 48.5 to around this, so 300, 400, 500 point move to the downside can very well happen. If we break out, boom, it can send us to all-time highs. Very simple, okay? That's all I got for you on today's episode, everybody. That is it. So just to wrap it up, look at, once again, there is countless reasons to be bearish. I've shown them all. Does this mean that the market's going to crash? No, it doesn't. Actually, a lot of the charts that I'm sharing, they're all bullish. I'm taking a lot of long setups. Can that change in an instant? Yes. So what's important? What's important is to control what you can control. The 4 things that you can control is what to buy, how much to buy of it, when you should sell it, and the 4th one, I'm drawing a blank. That's just how I roll. Let me think here. What to buy, when to buy, how much to buy, and when to sell. Those are the 4 things that we can control. We cannot control how high something goes, right? We can't control that. We can't control how many times we get winning trades. You can't control that. So there's a lot of narratives. There's a lot of macro thinkers out there, a lot of smart individuals calling for certain things. But one thing that you don't hear people talk too frequently about is just what to do in those certain environments and how to manage that risk. So we went over a lot of things today. All I need from everybody is just to be careful out there. That's it. As per usual, have a wonderful weekend. See ya!